All right, what kind of day do you think we're having today? Well, just look at the charts. Look at the charts. Everything is closing up over all the moving averages on the 10,000 tick chart, 5,000, 2,000, and 1,000. And the daily chart is looking bullish right here. We're still sideways though. That's where these trend lines are coming from. The big weekly trend is starting to stall out a little bit. That doesn't mean it can't continue up, but there's the highs and lows of the previous weeks. We're watching that very carefully. We have that put on our intraday charts right here, so we always know where we're at. And these white lines are the previous day's high and low. We need to always watch those markets. Now it's getting ready to get up into that white line, which means it's getting up into the previous day's high, and we need to always be careful about that area. All right, so we're going to finish talking about that in just a second. Okay, yes, the previous day's high right here, the yellow candle is the today, obviously, and the orangey candle is yesterday, previous day. Now, these white lines right here, and the two higher lines are the all-time highs. We should always keep those kind of marked out as liquidity sweeps. So we have those white lines. Any white line on my chart is some type of high and low of the previous day. Okay, any yellow lines is a weekly mark out. So keep that in mind. The market can do anything it wants to do. We do have a bullish bias today, but what we need to do is get a pullback. Before we do anything, we need a pullback. All right, these trend lines that we got drawn over here on the 2000 tick chart are just pullback trend lines. It's also could be considered buy trend lines, where if we get it to pull back to one of these trend lines and we see another trend line broken, we can have a two trend line confirmation on that where we can go long. All right, and so we're looking for it to pull back to any type of fair value gap. Let's see on the 60-minute chart, we've got fair value gap down here. We got a giant fair value gap. Well, it hasn't been completed yet, so we can't really count that one. 15-minute chart, let's see here. What do we have? We've got a lot of big ranged candles. There is a fair value gap down here that's already been tested though by those pintails, and it took right off to the top. And also, just because there's liquidity sweep at the top, and just because there's an area where doesn't mean it's going to go over the top yet. Keep in mind that right now on the daily chart, it's making lower highs, and it's consolidated. And it's been about a month going sideways. Okay, so yes, it could go up over the top anytime it wants. It could also rotate down to the 50 moving average and trend. We don't know what it's going to do. We just got to be ready for whatever it does. And right now, what we see is a bullish tendency, and we need to see if we can get on it long, and that's our plan. We need it to pull back a little bit into some variable, maybe a 50% retracement on a Fibonacci level. Let's draw that on our 10,000 tick chart right here. Now you see some areas where it could pull back that would correlate with this trend line down here. Moving averages could correlate with the 50% pullback, and we're going to be waiting for trend lines and moving averages and ICT fair value gaps, Fibonacci retracements to all tell us that, hey, this is a good time to possibly go long on this thing. I'm not looking to short it. I'm not looking to counter trend trade. There are some people who will look to short this, but with the moving average trend line strategy that we have, we're looking to go with the trend. And right now on all these charts, the 5,000, the 10,000, the 2,000, and the 1,000 are telling us this is a bull market. So let's get ready for that. All right, let's analyze this. We're critiquing the trades. And if we can't critique the trade, then we might actually have found a good trade. I'm on the 250 tick chart here down at the bottom. I use the 1,000 and the 2,000 on the bottom right. Maybe I'm getting eager to get in a trade. Maybe I believe in my mind, the subconscious, that it's not going to pull back, and I want to get in on one of these little trend line breaks here. It's possible that I think that because I have to be careful not to get in too early. But if I can't critique the trade, if there's no reason for me not to take the trade, I'm not going to use this Fibonacci yet because we don't know if that's the high. But we do need to keep in mind this empty space pullback. It's also very possible that it's going to go right to these liquidity levels, yesterday's high, and get stuck and turn around or try to break up over the top of it. So I am watching the 250 chart here, 250 tick chart. I'm watching very carefully all these other charts. And I'm hoping that if it seems right, and I can't critique it, it's possible to get in on a trade with a shallow pullback. Shallow pullbacks are all you get when a strong market happens. We just have to have our risk management. We just have to have everything lined up with that and keep our stop losses in place and make sure that we're not, moving our stop. Be willing to take your loss like a man and try to find a better trade setup. All right, we get a little test here on this trend line on the 250. I don't know if I'm just going to jump in right now. I'm not going to jump in right now, but it's looking appetizing. The reason why I'm so excited about it, because there's room to go up to the previous day's high. There's room for it to extend up, and all the moving averages and all the time charts are suggesting that it's a strong move up. I am liking the chance of it going up. I wish it would pull back a little bit more, but it may not pull back, and we want to get in on whatever trend line break it offers us potentially here. It could pull back deeper, it could head fake, it could break this trend line right here. This trend line going up could come down to the second trend line. And I don't know if I want to take the trade based on the 250. Sometimes that's the best entrance you can get. We could keep our stop loss extremely tight right here if we wanted to. And so we'll see if we get in on that or not. I'll keep you posted. All right, you can see right now it's popped up through that trend line on the 250. It was rejected up here on that. It was rejected. Okay, let's see what it does on that trend line. And we'll wait to see if it bounces on it. Something's telling me to just be careful here. We don't have our trend line drawn on the 1,000 tick chart. That's a problem. And see, using the 1,000 tick chart, we can see that it's actually not really breaking up over the trend line. You go too far down into these things, and what looks good may not be good. So this is why we need to use multiple time charts. Sometimes it looks good on this 1,000 tick chart here, and it does not look good on the 2,000. See how it looks on the 2,000. Why would you buy that if you're using the 2,000? You'd be like, it's stuck in the middle here, right? So I need to just back away from this 250, I think. I don't want to get in trouble with that. We'll just wait and see what happens. The risk level just increases the farther down you go. The 250 does look good. I'm not going to lie. It's bounced off that area, and it could keep going right here, and I could have
order filled.
A very tight stop loss on it. I'm going to just put my stop loss. Let's just see what happens here. If it keeps going over the top of this, then I've got in a good area. It may be that the volume is just too low right now, but I think a couple of ticks worth a try here to see what it's going to do. And if it fails, then I'm not going to take another trade on this 250 tick chart. I already told myself not to mess with it, and because I already looked at these, and I said it's not ready, and I did it anyway. So what I need to probably do is just get out. You can see using this 1,000 tick chart how that's right on the trend line, and that's probably not the best place to get in on it. And if it works, I would say that it's still not the best thing to do. So it's one of those things that if it does work, I still would probably try to avoid that in the future. And I would record this as a mistake, getting in on the 250.
Order filled.
I'm going to get out while I have a chance, and I'm going to play my plan better. And you might say, oh, you got out too early, you made a mistake. The mistake was getting in. I should use the 1,000 and the 2,000 tick chart. I've made records of that in my past, and it's what I want to stick with. So I'm going to record this as a mistake, an early entrance. That's a 1 tick loss. And what I want to do is I want to wait for it to break this area on the 1,000 tick chart. I'm going to try to avoid using the 250 tick chart. I'm going to keep an eye on what it does up here on this 2,000 tick chart, and I'm going to look to get in at my plan. My plan is to use these time charts here, and sometimes I'll look at the 250, and it does interesting things, but sometimes it gets me in trouble. Okay, I'm getting in now. It broke the trend line on the 1,000 tick chart. I'll give this a shot. This, even if it doesn't work, I feel better about this. We're going to put our stop underneath down there and shoot for that to go over the high there. About 17 tick risk, 17 tick profit. Let's see what happens here. This is something, like I said, getting in early on the 250 doesn't mean this one's going to work. Getting out of that trade because it was an early entry doesn't mean this one's going to work. Right? So hopefully this will work. We'll see what happens. Why are we getting in this trade? Well, everything's a bullish market. We got room to go up on the daily chart and to go up to the highs, previous day's high. We got room for that. And it looks bullish. So why not give it a shot? Why not give it a try? All right, we got a risk mapped out here good, and a target. And so let's see what happens. What I do often is once it starts making the move in that direction, I just sort of start to move my stop loss as well. If it gets halfway there and comes back, I don't want to be all the way down here. Everybody manages their risk differently, but if I can cut some of it out, that's fine with me. The 20 EMA is curving up strongly. So if it does come back down, I would imagine the forces under here are strong enough to keep it going. But at the same time, once it starts going into the direction, it's about a third of the way there, I'm just moving my stop in that direction. And losing is part of the game, and that's what we need to be really good at. We need to be good losers. Trading is one of those things that'll mess with your mind. You have to be able to adapt to the losses. And some people cannot handle losing, and they don't understand. You go through series of losing, and you have to be able to accept that. Taking a trade right here at the opening bell too is a little tricky. I could have waited till all this developed and the opening bell and then get in the trade, because right now my stop is at a place where it could easily just whip down and stop me out. And that would be my second loss. First loss was a tick. This one won't be. It's almost time for the opening bell. Get ready to trade. Make sure you have done. This stop loss is very small too, but the fact that it'd be 2 losses in a row, I'll have one more trade. If I get 3 losses in a row, I have to stop trading for the day, and I have to stick to that rule. So hopefully this one won't stop me out. All right, I moved it on break even, above break even, see if it goes and gets the target up there. I got to let the trade play out to first target or break even. I'm not going to, hopefully it'll go back up. Keep going up to the target. All right, we got the opening bell. Let's see what happens. We're already above break even, so we're good to go on this so far. Hopefully it'll keep going right on up there. Got to let the trade play out. I'm going to keep my stop right there. This will be a winner. It'll be a break even winner, but it's kind of what happened with the first trade. I broke even with 1 tick loss on it. And if it, whatever it does, we'll continue to look for our strategy, pullbacks, trendline breaks, and incorporate that with the ICT fair value gaps, Fibonacci pullbacks, and other variables and metrics to give us confidence in the trade. But we jumped in on this because it's such a strong move up, okay? On real strong moves, you don't get a deep pullback, all right? You don't. Not until it's done, of course, and it looks like it wants to go hit the liquidity from the previous day right there, at least that high, and we'll see if it goes higher, but let's try to ride it up, and we'll see if actually we can keep moving our stop up to that and trail it a little bit. I'm going to trail my stop here now up about 12 ticks on that. So we're right here with our stop loss. Target is up here near the high of previous day. And maybe I can go candle by candle on it since it's rolling. Let's see if we'll go candle by candle on this thing. Because if it pulls back now, I'm just going to get out. Be happy with that. If it breaks that candle before going all the way up, then momentum might be stopped. Technically, it might go over the top of that. So let's put our stop over the top of that. Trail it candle by candle. If this is momentum, it'll go right to that trigger, go right to that trigger. Now we're right to the top of that candle right there.
Target filled.
Target filled. Okay, it went over the top of previous day. Target was filled. Now that was a winner, but you might say you could have just left that on the 250 tick trade that I made. Guys, when you make a mistake, if it's successful, it's only going to create bad habits, okay? I don't want to have a trade go good when I made a mistake. I know that sounds counterintuitive, but yes, this did work. But I got in because I was too eager. It went against the 1,000 tick chart. It didn't break yet. The second trade I took was because it had broke over the 1,000 tick chart. That's why I got in the second time, okay? And it tested that trend line. I would have even had a better price if I waited for the retest. Notice that it bounced off the 20 and the trend line. Perfect, beautiful, textbook, 100% gorgeous entry on that trend line moving average, two variables together. And so, you have to get it through your head that if we are taking trades outside, risky trades outside of our plan because we're eager, emotional, FOMO, or any other reason, and that trade actually succeeds, you have to understand that that's damaging. That's not good for you. It's not good for me. It would not have been good for me to take the trade early and have it work. I have to stick to my plan. Okay? So I hope that makes sense to you guys. Let's recap. Why did we get in? We have agreement on all time charts. Price is above all the moving average on all the time charts. They've crossed over the 200 moving average, all of them. The only thing we're waiting on to be superior is for these moving averages to get back up over the 200, but that's not going to hold us back when we have this kind of harmony of price action. Okay, so we got in because our moving average strategy, trendline strategy, tells us that when the 10,000, 5,000, we got those backwards there, the 5,000 is down here in the bottom left. When those are all agreeing that we should take the trade, then that's what we do. We go long when it's all the time charts are agreeing that everything's going up over the 200 moving average. A lot of times you only get one opportunity to take the trade, and you got to take it when it looks good. The shallow pullback is all we got so far on this. We could be waiting and waiting and waiting, and for it to go and go all the way to its high of day before we even get a chance to get in it. So shallow pullbacks are sometimes the only way we can get in the trade. Another thing we got to be careful of is over trading. I think as I'm getting more and more into trading, I'm going to try to trade less. If my first trade or first couple of trades I do well, I'm going to be careful not to give it back to the market. Here's another shallow trend line break right at the previous day's high. So it's trying to get over, then it failed. Now it's trying to get back over with a trend line break. And if this was my first trade, I would definitely take it. But and I'm tempted to take it. It's trying to climb over two things: the previous day's high, and the trend line and the moving average. So this is a good quality setup trade, in my opinion. What we have is it's going sideways on the 5,000 tick chart right at the previous day high. So anything can happen. If I was going to be more confident in this breakout, I'd like to see it go up higher and then come back and test. Right now, it's just hanging out at that level. So it's going to be interesting. Let's draw a box where our stop loss would be and where our entry would be, and just kind of mental trade this and see what would have happened if we decided to try to take that. See, now it's below previous day, below the trend line, and now now it's not looking so good, is it? What we have over here in the 2,000 tick chart is telling us to be careful, because it is consolidating, chopping right at that level, and that's what it's been doing for the last, I don't know, few days, a week. It's been messing around with the previous day's high and low area, and it's very challenging, at least at this season, to trust that, hey, it's bouncing and it's going to go, because it's been chopping around. If you go back and look at the last couple of days, intradays, it's been very, very hard to figure out which side of the line it wants to be on. So I'm not going to give it back. The whole point I'm trying to say here is that when we have a good first trade, we have to be careful not to give back our profits. We have to be 100% sure that if we take another trade, that it's an A+ high quality, no question trade that we can take it. And right now, dancing around this previous day's high with what it's been doing for the last week, because I've been watching its behavior around these areas, I don't trust it, to be honest with you. We would have been stopped out if we tried to catch that trade. Now, if that was my first trade, that's not a problem. It was worth a try. It was trying to get over the previous day's high. Trend line break. Got a bull market everywhere we look. Bull market. Give it a try. First trade. And if it was a loss, that's fine. First trade can be a loss. But I don't want to give back my profits from this trade. I don't want to give it back. If anything, I could have tried to trail it up I would have probably trailed it up to this spot right here, and I would have been stopped out there anyway, because I would have wanted to raise my stop loss. I'm just glad it happened the way it happened. Thank God for that. If we do get another good setup, if it pulls back to Fibonacci levels, if it pulls back to fair value gaps, I'm not saying I'm not going to take another trade necessarily, but I would have already given back my profits, or at least some of them right here. Some of them, if I had taken that trade. The point is, again, once we have profits, we need to be very careful not to give it back to the market. All right, we're getting a deeper and more significant pullback now. I think it's something for us to watch for sure. Keep an eye on the 2000 tick chart lines, making sure that we got all of them drawn in, just so we can be 100% aware of all the angles. And we're just about come all the way back to where we entered in on this trendline break, almost to the tick. It's a good thing that we took profits when we could. Thank God for that. And it's time to start looking for another possible setup here. The lowest time chart, the 1000 tick chart, is going to oftentimes look bearish. It's going to look bearish, and the lowest I like it to pull back when on a conservative pullback is the 200 moving average, and that is going up. Okay, so the deepest pullback would be for price to come down on the 1000 tick chart, come all the way down to the 200 moving average. It's going to look a little bearish on the 2000 tick as well, but hopefully if everything looks good, it'll only be back to the caution zone or the danger zone on these charts, and the moving averages will continue to look stabilized. In other words, they will continue to be above each other and continuing up. All right, that's the best case scenario for the pullback for a bull situation. You want, and again, remember, we don't quite have the moving averages above the 200 on the descending. It just now ticked up. The 200 going down right here on the 10,000 tick chart. So it's not the superior setup. It was a good setup. It was a great setup. It worked. But to get a superior setup, you really want the 200 going up, and you want the moving averages above the 200 for a bull run. Okay, so this could correct quite a bit, and there is room for it to come back to the trend lines and to the moving average and to the empty spaces and to Fibonacci retracements. Now you see we got a trend line break almost taking place over here on the 1000 tick chart, and it would have been tempting if it did continue up. It's on this side of this trend line. It's underneath the moving averages, but it's only the 1000 tick chart. If everything looked good on the 2000 tick chart for a breakout, it would be more interesting. But you see the trend line right here, it's pressing it down. So and then again, like I said, if it pops up over the top of the 2000 tick trend line, that would be more appetizing. Using the 1000 and the 2000 together give us a pretty good vision of what's really happening. Sometimes using just the 1000, it's like using the 250. You can get some head fakes on it. Okay, we see that price is rolling around here, coming into an area where it took off, which is a little bit of a good sign. And then the 20 EMA right underneath it. So this area could be another area that it wants to take off and take the trade. It's possible that this is setting up. All right, this is worth a try. This is worth a try right here. Take this trade higher. The question is, do I want to give back any of my profits? And the answer is no. Fear of giving back my profits could be keeping me back from taking this trade right here. If this was my first trade of the day, I would be all over this trade. I would. It looks good on the 2000 tick chart. Looks good on the 1000 tick chart. It's pulled back to some areas of, looks like supply, demand, and it's right just above the 20 EMA. And it's coming back up over the trend lines. So if we were to take the trade, we would want to figure this out right here. Let's see where we would take it, and it would be very interesting to get in. I would probably already wanted to be in on that first green candle, so it would already be green right here on the 2000 tick chart, that very first green candle. And this is our entry, exit, stop loss under the pivot. We'd be in right there on that first dotted line. Target for one is right up here. That's if I wanted to take that trade. my first trade, I would have been all over that trade because I'd have been eager to get a trade in, and that's a beautiful setup. I probably would have already started moving my stop up a little bit, so I would be reducing my risk already. It's halfway to target 1, so I would be raising my stop loss up. And it looks good. It looks like we would have hit target 1 no problem. And that's the good trade setup right there. Now, why didn't I take it? Probably fear of giving back my profits from the first trade. I want to start this week off on Monday. I'm taking it easy. Head's a little foggy from the weekend, and I just want to continue critiquing, observing, monitoring, analyzing, perceiving the experience of trading, working out ideas, comparing ideas, testing ideas. And this is also going to help us in our trading. If we don't have to be in a trade to test a trade, to observe a trade, and the behavior and price action, it's all still very helpful. On Mondays, we have to be very, very careful. We're eager to trade. We want to trade. It's been a few days since we traded maybe, and Mondays are a good day to overtrade. So I don't want to do that today. Maybe I will take trades on Monday. Look how good that is. I feel like, I should have got it, but I wish I would have took that trade, but there's a hits target 2 now. But how would I have felt if I lost and gave back all my profits though on a Monday? How many times have we done that on Monday where we overtrade and lose everything because we want to keep trading because it's Monday and it's been a while since we traded? So it was a good trade setup. I just want to highlight that the trade setup was good. And if it was my first trade, that would have been a no-brainer. Take it. So what can I learn from this? Target 4 was hit on my A+ trade setup that I did not take because it's Monday and I don't want to give back my profits from the first trade. Pretty interesting. I'm going to have to contemplate, concentrate, meditate, really think about how this turned out and what I should do in the future for that kind of thing. And this is what can happen in the blink of an eye. We see it dropping down like crazy right now, giving us a good opportunity perhaps to set up another trade. I personally am not going to take any more trades today. I made my mind up. I've already had my winner, and I'm going to, on a Monday like this, I'm going to chill out. Now, what would happen if I took another trade, lost everything? I'd be beating myself up. But we're right back to that area where we took that first trade, right over here. First trade and second trade. The second trade was a big winner. First trade was basically break even. Here's that trade we missed. And I was saying if I didn't take the first trade, we would take this trade right here. Excellent. Our strategy really gives us some great opportunities. That had 4XR return on it. And now it's back down to that same exact area right here. I'm not going to take the trade. It's not breaking a trend line. In fact, if we look, it can definitely keep going down. We have some Fibonacci levels down lower that we're looking at on the 15-minute chart. And there's some fair value gaps way down. And what's the day chart look like? I mean, the day chart did go over the previous day's high right here, the white line, previous day's high, went over the top of that. But now it's back below that. And we know what happens when that happens. We've looked back, tested, look at all these times that it went below the previous day's low. It had another day down. Here it did it here. It did it here. It did it here. And matter of fact, it did it every single time that it dipped low, it had a fallback. So right now, I mean, I don't know if it's going to stay under, if it's going to stay underneath or not. The pattern is we're headed lower if we continue down like that. Now, it could always go back up over the top, but if it doesn't, I'm just saying that's the pattern on the daily chart. If it ends up closing below the low of the previous day, it's probably going to go down tomorrow. So we know what our BIOS will be like based on that pattern. You're going to get some interesting looks on it. You're going to get some, but as long as it's below this white line right here, I'm not interested in going long. This white line is yesterday's, the previous day's high, and it went over the top of it and come right back down. I'm not interested in going long until it gets back over the top. If it makes a higher low, continues to hold this area, and it makes another high low, and gets up over the top, then there might be a chance to look for an A+ setup. But until then, I would not be going long on this right now. Record crucial moments in the trading pattern. You see this. This is the second time. I moved this trend line once already. Sometimes keeping the old trend line where it was helps you understand what's going on here. But it failed right here on this trend line, and then I moved the trend line out further, because that's what you're supposed to do. Follow the pivots. Each pivot, you got to find the new trend line. Trend lines are being created all the time. And so we got this right here, and then you can see it failed that one too. Once we put it out there like that on top of that pivot, it failed. Now we keep drawing new trend lines, right, until eventually it breaks over the top. Eventually it's going to break over the trend line. At some point, it eventually will. They always do. And so I'm just going to draw 3 of them just so we can see what we're talking about for illustrative purposes. Yeah, I was expecting it to bounce off of that trend line. It bounced off of that trend line. It's still holding that higher low in that same area, but look at the white line over the top, back under with a lower low there in this trend, back up, didn't go quite as high. So really it's trending down below previous day's high. So that's not a good sign. If this was taking place anywhere else other than the previous day's high, I'd be interested in trying these longs, especially if I had not already had a winner on Monday.